What's up, guys? I hope you guys are having a great Friday. Now, I just want to do a little video um, involving stocks. A lot of people know me as a forex trader, but a lot of people don't realize that these stocks and forex and currencies and all these different assets that are tradable, they all actually move the same. They might work in different rhythms and in different paces, but when it comes down to the technical analysis, they all work the same. I'm using all the same concepts to trade a specific currency, such as the dollar to the pound, as I would for maybe Tesla or US 30, which is the Dow Jones. So I just wanted to show you guys just kind of how transferable this skill set is, whether you're a stock trader and you trade options, or you're just, buying shares of Tesla, the reason I came up with this video is because I was talking to one of my, closest friends' fiancés the other day, and he was mentioning how he was invested into Tesla, which is, one of the most popular stocks you can be in right now. And, I just, I was really happy for him, that he was, investing in it and, at such a great price. When he told me, I think he said he got it somewhere around maybe 400 or um, whatever it was back in December. Let's see. If I go back to December 19, probably change the time frame. But yeah, so okay, we'll go back to December 2019. Tesla was about $400 a share. Tesla is now trading at $14.18 per share, with the high going as high as $18.02. And this is really significant because if we look at a percent increase, since December, it's something ridiculous because the swing low to the swing high was an increase of about 387%. That is ridiculous. And that is a great price to be getting in at. I'm happy for anyone if they did buy shares at that price. And this individual, I'm pretty sure he sold his shares at around 11.50, which is a great increase. That's still a pretty ridiculous return. I just want to show you guys just how transferable this skill set is. Whether it's stocks, gold, sugar, I don't care what it is. You can use these concepts that I teach in my course to trade whatever it is you want to go and trade options on Robinhood, or if you just want to open up a regulated or unregulated broker, you could do that. So I'm going to break down Tesla here. Right now I'm on a daily chart, higher time frame, and as you can see, it's I do have markups from way back. I've been looking at this for a while. Here what we have is a good idea of what we call wyckoff schematic. And here, this is what we call a distribution. So back in 2017, this was a distribution phase. Now I'm going to pull up something for you guys. It's called the wyckoff schematic. So give me a second here. So, there we go. Now, as we can see here, if you were to pull this picture up and we were to do a side-by-side comparison, because long before we had this technology, had trading view and different things like that, we had to use simple charts and compare old data to what we're seeing now, looking left to get right. So that's what we do when we're looking at these charts and technical analysis. We're looking left to get right. Figuring out what happened in the past to kind of give us speculation on what's going to happen in the future. So as you can see here, this is a distribution schematic. Now, if I were to pull this side by side. You can see here our buying climax, our after reaction, our secondary test. Then we have our sign of weakness, upward thrust. Here we have our upward thrust after distribution. And then now here's where we get our sell-off. So here about back in November 2018, this was the sell-off. Now remember, this is a daily time frame, large time frame. So these, these are trades that you would like to hold. So if you got into a sell position here, you would have been, shorting Tesla. So if you were in an option, you would have been doing puts. So that means that if you do a put, that means that you're expecting that asset to decrease in value because you can actually, profit off of the market going up and you can profit off of the market going down. That's one reason why I love trading so much, is because whether it's going up or down, there's opportunity everywhere as long as you understand these market phases. As it says here, events and phases. This market is a cycle. So you have to understand, just like real estate, where you are in that cycle. So if I were to scroll up, as we can see, we would be in a distribution area because it is overbought. So if I'm thinking of Tesla right now, I have to think to myself, where are we? Are we oversold? Are we overbought? Is price going to be marking up or is it going to be marking down? So let's go back to where we are now. And one thing about the markets is it has to stay efficient. Markets have to be inefficient. They have to remain in equilibrium. There cannot be any type. It's all about balance. So when it comes to these markets, they're constantly looking for liquidity and looking to remain in balance. Because whenever you have an open buy position, these buy orders have to be matched with sell orders for the market to remain efficient. So as we can see here, put my chart full screen. As you can see here, I'll drop down to a lower time frame. I will give you the exact scenario I was referring to with my friend's fiance, where he mentioned he was in a Tesla position. And I'm not a financial advisor, but I will give my friends some advice if they're looking to take positions. And I told him, that there were opportunities approaching where he could also, buy back those Tesla shares at a discounted price. So, I told him, I screenshotted him. I said, this was, a while ago, maybe, 10 days ago, price might have been somewhere around here. And I told him, I said, listen, if you want to go buy more shares, buy it at a discount, buy low, sell high. So that means if he wanted to buy more shares, he doesn't want to buy his shares up here, 1787, where it's been overbought. He wants to buy them, his shares for as cheap as possible, because he already sold them back at around 1150. He already dumped them at around 1150, but he wants to get in again. So where does he get in again? When is a great opportunity for him to buy more so that he's not overpaying? So I told him, listen, pay attention to this red line. This is going to be your support and resistance. This is where you're going to get, these shares at a deep discount. And the way I was actually able to figure that is because, by looking, I understand the way the algorithms move and the way they look for liquidity and, just how markets have to remain in balance. So I understand that by using, Fibonacci ratios, I'd be looking to get anywhere from a 71 to an 88% discount on those shares. So this is our buying region where we'd like to take opportunities. And I said, pay attention to this red line. And maybe 2 days went past, and look what happened. Price came down exactly to 1431, and this would have been the optimal opportunity. Not to mention, this is happening at 14 GMT. meaning that is about a little after New York Open, which is the optimal time to take an entry. I only take my entries, within a certain window. I don't sit at my computer for 10 hours a day. I'm usually in that window and I'm done for the day, doing other things, teaching students, whatever that might be. So this would have been an opportunity for him to get in at 1432. And as you can see, if you were trading an option or anything like that, the price then starts to go back up. So then he could have then sold those, uh, sold those shares or whatever it was. If it was a short-term options trade, or even if he just wanted to hold it, he still would be buying it at a discount, because we do expect this price, to reach 2,000 with all the things that Tesla's doing with their, new plants and things like that. So yeah, that was a great opportunity. I personally did not take this trade, but I did have it marked up, and I am very bullish on Tesla. I have been. I tell people all the time about, when I first started looking at the market in 2013 while I was in high school. Tesla was trading at $34 a share. As we can see, I have to go back very far for that. So yeah, about here, little Tesla, I knew was going to be the future, but I was a kid. I wasn't really being smart with investments. I was just paying attention, but I wasn't really actively investing. So little time has passed, 7 years. Fast forward 7 years, and if we look at the percentage increase in Tesla from then, looking at about a 4,739% increase, which is something ridiculous. So yeah, people have become wealthy off of this, getting in early. It's kind of ridiculous to see it, what the price was then, and for such an amazing company, I'm pretty sure they just passed Toyota, was it, for market cap, as one of the, in market cap for, automakers. So, kudos to them. But you should be expecting a retracement, just because, this is a lot of imbalance, because we do have a lot of buying pressure. So we're gonna, see a lot of sell-offs, and because this market does have to remain efficient, as I was mentioning. So do not be surprised if we see a retracement in Tesla for the long term if you are buying shares. But this kind of trade would have been optimal for something such as an options. But if you are looking to go long and buy equity, you might be able to get an even deeper discount if you just remain a little bit patient. But yeah, that's all I wanted to share with you guys for today. I hope you guys really enjoyed this video and took something from it. If you are looking to really get into trading, please subscribe to my channel, and follow me on Instagram. And I'm always giving out free material. I have a free Telegram where I send out live trades, Monday through Friday. And my course is now up and running, and mentorship is actually starting on Monday, so I'm excited to get that rolling. I hope some of you guys find interest in this, and I can help you guys kickstart your career with my beginner course. Yeah, so thank you guys.